My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, how do you like this idea? How do you like starting from scratch and then in 4 years or less owning and controlling a portfolio worth over $50 million in multifamily? If you like that idea, pay attention, because that's exactly what our guest here today has done. Kevin Falk is almost a neighbor. He's zooming in from just outside of Seattle, Washington. And Kevin and his team have done some pretty big things very quickly in multifamily in their neck of the woods, which is one of the more expensive markets in North America. So Kevin, welcome to the show. Great to have you.
Thank you for having me, Dave. I really appreciate it.
So Kevin, give us a little snapshot of the portfolio as of right now. It's October 2025. What do you guys got? What size properties? Where are they located? Just got to give us an idea of what the portfolio looks like.
Yeah, so we're typically somewhere between 5 to 50 unit apartment buildings. When we started out, we were obviously buying on the smaller end. We just bought a 56 unit about in July. And we have 3 deals under contract right now. And the beauty is, I feel like LP Capital has came back because we raised all 4 properties in 4 days.
Wow. That is outstanding.
So that'll put us at 12.
12 different properties. And how many units altogether once that all smoke clears?
It's going to be just shy of 250.
250 units altogether. All right.
250 units. But a lot of people will see, depending on the submarket, in Seattle at a 300 a door, we're creeping up on, 60, $70 million in real estate.
Yeah,
so
most definitely. Yeah. Okay. So a couple of questions. Location, whereabouts are you buying? Is it like right in Seattle, outskirts, suburbs? What's your preferred buy box?
It's very important these days, especially at least in the Pacific Northwest, is location. So everything is located within about an 8-mile radius of downtown Seattle.
Wow.
So, we have a few that are a little bit further, and then we have one that we're currently purchasing, which is on the east side, which is not too far from Bellevue, which is also another tech hub. Microsoft's campus is over there. That's really important for us, is getting close to where the good employers are, because then you get a really good tenant demographic. And then we pick the areas that have and attract the kind of, 6-figure tech worker, or just anyone that's a good working class that's looking for high quality. So our big thing for us is we do A+ neighborhoods, and we renovate or we purchase. We've done 2 stabilized purchases just because the basis was so good. And then the rest of them are all value add, and we renovate to a very high spec so that we do attract the folks that are looking for stainless steel, soft coast cabinets, countertops, flooring, all that. So we really attract to folks that really want like kind of a new product, but for a more affordable price. But then it's also still at a price point that gets you really good quality tenant base. That's the reason why coming up on 4.5 years, we don't have a dollar delinquency on our entire portfolio.
Wow, that's amazing. Kevin, let me ask you a couple of questions that come to mind. So number one, walk me through big picture, one of your recent deals. Maybe it's one that you're just closing on, you just raised some capital for. No, let's talk about one of the existing ones that you already kind of got optimized here. Walk me through that deal, if you would, like before, during, and after. So what was it? What was the price point on it? What were the rents on it? What did you do to it? And what does it look like now? Do you mind walking us through something like that?
I actually have a perfect scenario because about 24 hours ago, we got our first property that we were going to be selling as an exit because we're only 4 years young. So we usually put 5 to 7 year fixed rate money on our deals. So none of them are coming up for maturity. And we think that the market's, no one has a crystal ball, but we think the market's going to be significantly better in the next 12 to 24 months, with rates maybe getting a little bit compressed and, with the lack of supply coming into Seattle because of deliveries, it's too expensive for developers right now to develop.
Yeah.
Rents are going to shoot up. So we don't have any intent to sell, but we have someone coming out of a 1031 exchange. So we bought a 6-unit in January of this year. We fully renovated it by just the end of June. So we've only been cash flowing it for 3 months. We bought it for 1.4. We're selling it for 2.3. And it took about just about 800,000 in equity. So give or take the profits, it's going to be, with a split with our investor, it's going to be somewhere in the 40 to 50% IRR range on a 8-year hold, maybe even a little bit better. So and we're just going to 1031 into another project with that client. So we have a mixed bag. We do single LP investors that still kind of run and operate as a syndication, and then we'll also just have a significantly more smaller equity checks that we do on syndications as well. But this just happened to be a single investor. He's very happy, and it's one of the deals that is under contract is a referral from him, one of his friends, that said, wow, you did such a good job. Like, let's go do another one. So that's the project that we're doing over on the east side that we're really happy about. I mean, the basis in Seattle right now is something we haven't seen in our careers. I mean, we're buying deals that are Biloxi, Mississippi prices, which is kind of mind blowing. So, yeah, we have 2 deals that are sub 150 a door in Seattle for value add, which is like, that's really hard to find, especially in core Seattle.
So what's going on that's causing the prices to bottom out so nicely for you in Seattle right now?
Yeah, I don't think a lot of people can navigate it. And I think that's why also our property management arm's blown up. We've only had it for about 18 months, and we're going to be scraping 1,500 units here in third-party property management. It's one, because we're young, hungry, and we're grinders, so we're doing a really good quality job, and we come from an operational background. I mean, I was a property manager for 16 years, so probably one of the only property managers to come from property management, become a syndicator, but luckily just ran through my career and it ended up here. But we really understand how to operate properties, which is also why we can go in and take some of these really more, I wouldn't even say fully distressed. They're actually in pretty good shape, decent. I mean, we just have to upgrade some systems, renovate the buildings, finesse it. And then with rent control and how strict Seattle is for the landlord, it makes it really contrarian. Not a lot of people are, jumping into the Pacific Northwest because they'd rather, kind of maybe be in a more landlord friendly state. Mm-hmm. But honestly, there's a lot of the other side of the coin on this, because it's so difficult in Seattle for developers or anyone that's trying to build new products. So we're always, inventory shortage and a lack of supply. So that's why our rents are so high. That's why there's such a high demand. That's why there's so little amount of vacancy. I mean, we saw 15,000 units get delivered to Seattle in the last 12 to 18 months. And we saw it break even, or like about a 1% rent growth. But to have that much delivery and not go backwards is significantly different than somewhere like Austin, which their rents went down 20 to 25%. So there is the nice thing. And we're also geographically constrained, right? We have water, mountains, and we have one of the highest, densest single family populations for zoning in the nation. So it's really juicy for us. We love the business. We like that there's lack of competition. And we've really found a great way to work with the tenants that, kind of sometimes can make your life hell. I have actually 2 pretty good funny stories that happened today, but we could chat about those as well.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Well, yeah. So it sounds, I love what you're talking about, contrarian, right? Because everybody in real estate's wanting to avoid Washington and California and all these super tenant-friendly type states. But is it because of your experience in property management that you know how to toe the line and yet still be profitable and work within the parameters? What do you think?
Yeah, I think, you really look at the attributes of what it really takes. It's like kindness, care, understanding, listen. And then also you have to be a little direct, and sometimes you kind of got to be a little bit blunt. But, you can always just revert back to the lease. Like, we have the best attorneys in the state on retainer. They're always drafting up ironclad leases. We know the laws better than anyone because we're getting updated, on a weekly, monthly, sometimes basis because it changes so frequently in Washington. And we also own, so we understand it from the ownership's perspective. So it just really works out well. We know, and then, nice having all this other product out there. So we have, efficiency units, we have SROs, we have market rate, we have, we don't manage really any full low income, but we have some, and then we have student housing. So we know all the product types that are kind of doing better, which ones are struggling, which ones that need help, and how to get creative to make them perform. I mean, it's been a pretty great experience over the last 4 years to start a company with me and my business partner for $2,000, to have what we have now and to have the portfolio we have. Also to just have such a great staff. And like, I don't know if you can kind of tell by the energy, but like, we love what we do. It's a lot of fun. We have a great team. Everyone's energized. We put in a lot of care. We're in the trenches with our employees, and, we're just having fun doing it because life's too short.
So Kevin, you titillated us there for a second with a couple of fun stories was that about tenants that you're dealing with? So tell us at least one of them.
Yeah. Okay. Well, I got a photo this morning from my maintenance guy, and on one of the offices on the glass window was about 20 different paragraphs handwritten. So I got to give the tenant credit for this much, time put into such a ridiculous complaint that could have been sent via email, which I ended up having correspondence. We eventually got an apology because it was,
what is they wrote it on what? On the window?
On paper, and then taped it on the glass window so we'd read it. And this is over a treadmill has been down for a while. Well, we took over a property that was very underperforming, had horrific management for the past 5-10 years. And so it took us a lot of effort to get to the place. Well, she just would have sent out an email and said, hey,
treadmill's not working.
Can I get an update? Well, we actually just approved to have the whole gym renovated, and we'll have it done in the next 60 days. So it could have taken a little better communication, but to have this like pretty aggressive, brushing up on vandalism type note to us, we get this a lot. I will say that there is a little bit of some special folks in Seattle that just go above and beyond. I'm sure it's everywhere, but I will say Seattle specific, you do get a few that just like to go above and beyond and want to be heard. And we've had cats that have anxiety that we can't get into the unit because of this and do maintenance. So, I mean, you just have to find a way to work with people. At the end of the day, you're working with people, and you have to accept that that's the business line you chose. Like, if I didn't want to do that, I could have turned to sign and construction, but I'm in a people business. We got to understand how to finesse it. And at the end of the day, the problems go away. And we actually had a tenant that apologized and said, hey, I'm sorry, I was just a little out of line. Things have been boiling up at work or whatever. But yeah, it was a funny one today. We all had a good laugh on
You're in a people business. Big part of it is dealing with existing tenants, keeping them happy, keeping them paying the rent. Another part of it is finding opportunities, deals to take down. The other part of it is dealing with people raising capital. So it sounds like you guys have been very successful at that. What have you learned over the last 4 years when it comes to finding investors and raising money for your deals?
Yeah, that's actually a perfect question because I'm still kind of in shock on what happened in the last 7 days, and specifically 4 days in general. For us, it was to raise on our first deal, $1 million was, a lot of gray hair. It was a lot of 25 and 50K checks. It was getting your name out there. We had no proof of concept. We just said, hey, we're operators. We've been in operations, but we haven't done a deal. We haven't had an exit. We haven't had anything. We have no brand or anything built out. Well, fast forward over the last 4 years and, never having a cost overrun, never having a capital call, only having to do a pause on distributions for just a slight time because Seattle did have a lot of regulations that came out with this thing called ROIO, which you have to do inspections and all of these updates. It's kind of like insurance did to make sure that, the landlords now have to pay all these extra costs. We always just want to make sure that we're always very conservative, holding back capital in case these type of black swan events happen. So we just did a cash accumulation. It's not like the investors didn't get the money. It just went in the bank account instead of their pocket. But now we're in a good place. And, for this type of capital raising now, it's like everyone's kind of built some trust and we built a brand and things are going. And we just put out 3 deals and we just finished up a $4 million capital raise. And I mean, that was serious. Like that took a while. I know a lot of people that do a lot more and kudos to them. But for being a newer group, a $4 million capital raise is real. And that was for that 56 unit we just bought, and that took us 90 days. Well, we just had another $4.4 million capital raise across 3 deals, and we raised it in 48 hours. And then we had another $4.4 million come in. So $8.4 million total in 4 days because the deals we're putting out. I will say it's pretty easy. When you have a good deal, the money comes. If you have deals that are pretty good, but the market's just not really at the bottom yet, and you're not hitting the exact numbers that you're able to put out, that just, you have to put in a little bit more effort. But I mean, the deals, we haven't done any that are ever been anything even remotely.
So what are you doing to generate leads and interest? Like, you started from scratch. The first deal was, a challenge. Now it's much easier. So what have you done to create that list of people that are ready to jump on your next deals? You say you find the deal, the money will find you. I politely disagree. I think it's because you've got the track record and you've dug the well before you're thirsty, and you got a bunch of people kind of watching what you're doing. That makes it easy to raise the capital at this point in my mind. But tell me a little bit about how you guys have generated the interest.
No, I completely, no offense taken. I'm a firm believer of it's just, we've seen it. We have 3 really exceptional deals. One at 119 a door, one at 129 a door. I mean, one of them sitting at 16% cash on cash. The other's a 10. I mean, all of those were single investor equity checks. And it wasn't some large whale that we've been waiting for. It was folks in our network that said, okay, I'm ready to step up. It is track record, but also just the amount of people that have come in. And then it's crazy enough to believe, but we haven't done any marketing. We haven't done any crowdfunding. This is all word of mouth and just kind of people that have brought other friends and family in. A lot of brokers. I was a broker for 3 years. So a lot of brokers that are closing deals are, introducing us to other folks, or they're also helping us with our property management, but then they're also putting in their commissions on deals that they've closed. And that's been a good way to network. But, I think we're actually just had talks with our attorney. We're about to start a fund next year. So I think that will take a lot more kind of marketing and raising because, we're trying to shoot out for some pretty big numbers. But I will say that it's been exceptionally easy in the last 3 months to raise capital. And I just think it's kind of the whole ecosystem of it. Good deals, track record, good people, good investors. And we're really selective. We've really been kind of choosy on who we want to do business with, why we want to do business, how we operate, who we have on our staff. And it's been a really great formula.
Wonderful. No, that is fantastic. Congratulations, Kevin. And I'm sure people listening or watching this, some of them are going to want to connect with you or find out what the heck are these guys up to in Washington State. Where should they go to check you out?
You can just go to our website. We have a LP investor form you can fill out that goes directly to us if you're interested in investing. That's NordicINV.com because we're Nordic Partners Investments. And then our property management and brokerage arm is Nordic Real Estate. So Nordic, and then INV, which is short for invest.com. And it should have all of our information.
INV.com. Where does Nordic come from? Besides, I guess you're the North and I'm Canadian, so it's all relative, right? So
no, it's fine. Ballard is where I grew up. I went to Ballard High School. I grew up in Ballard. Ballard is an old Norwegian fishing town. My dad was a commercial fisherman. Tons of Norwegians came out of there. They have like Norwegian parades every year, still to keep kind of the heritage. And so it's kind of paying homage to my dad. The first property I bought, this was just for a family deal, was in Loyal Heights. So we called it Nordic Heights. And then I met my business partner halfway through renovating it. And I was like, maybe we should turn a business out of this instead of just like a family investment. And then we were just like, well, what should we do with the name? And we already had Nordic in the name. We were like, why don't we just do Nordic Partners Investments? We're all, have some Norse and Scandinavian in us. So let's run with it. And it's been great. Yeah, people like it.
Yeah, no, it's a good name. Awesome, Kevin. Well, hey, all the best. Keep up the good work. And thanks for being on the show.
Absolutely. Thank you so much for having me, Dave.
All right, everybody, take care. And we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.